JBlog, 17th of October 2010. Starting out with everybody's favorite graphic right now, gold. Of course, the gold story is out there. Everyone loves gold these days because of quantitative easing version number 2. The imminent demise of the US dollar, going over to the US dollar. Of course, here we have probably the most disliked, hated asset group right now, the US dollar. Everybody dislikes it. Why, I'm not totally sure, because it's definitely no worse than any of the other asset classes out there. And, well, it is highly oversold at this point. I'm looking here at the RSI. It hasn't been this oversold in a very long time. And of course, stochastically it is very oversold. Oh, sorry, stochastically here, MACD is oversold, TRIX oversold, and of course the turn side of that is gold being amazingly overbought, more overbought than it has been in a very long time. Overbought on all the indicators that I can look at. We have oil. Oil is kind of an up and down story. People love the metals right now. Not so much energies, but energies definitely are doing quite well as well. This big bounce that started happening as soon as the Fed started talking about QE2. Natural gas has been quite disastrous, which means that there's no economic activity, and this is kind of the part that is confusing, I suppose. The bulls are excited because things are so bad. The Fed and the government is actually willing to steal money from future generations and spend it on the current generation who doesn't want to spend money themselves. So basically an unelected group of bankers basically is forcing us to spend money we really don't want to spend. We know better than to spend it, and they said, well, you don't have a choice, we're going to make you spend it anyways because we're just going to inflate away what you have. It is quite outrageous, actually. It is amazingly dictatorial. It's quite draconian, really, when it all comes down to it. It makes me upset because it drives so much pain into the future for a little bit of gain at this point. And the population, I think, is quite ready to take the bitter pill at this point for the long-term gain, but politicians and bankers are not willing to do that. They continue wanting to get their bonuses simply because they live in a different world. That's all I can tell. Gasoline is up higher again, but certainly no new highs on the gasoline side of things. Silver, even more overbought than gold, and fantastic run up here. Now silver might even be a little bit deserved because the way silver comes out of the ground as compared to gold is in a 1:16 ratio. If you look at the gold silver exchange rate, is still at 1:56. So silver, by historical standards, and these are standards that go back 2,000 years, silver is still very much underpriced as related to gold, as related to oil, as related to a lot of things. So there might actually be a legitimate run up here, and after all, we need those cell phones, we need those electronics, and all of those things use and need silver. VIX non-existent. There's no fear in this market. The possibility of any downturn or anything going wrong is being discounted at this point. Again, it is quite interesting what's going on there. This is gold in the euro, so it just shows that gold does not really have a new high. It is more a US dollar move than a gold move. This is copper. Copper has achieved new highs. China, of course, is still building enormous amounts of infrastructure, and that takes copper. The markets have not yet achieved new highs, but they are getting very close to it. This recent run-up is surprising me. Personally, I did not expect it to be this strong. for this long, but there's several different possibilities what might be causing this. One of them is, of course, that if the bulls do want to sell out of their very overpriced, very expensive paper at this point, they need to create a market. Jesse Livermore was talking about that in his um, um, reminiscence of a stock operator about how people need to find buyers, and in order to find buyers, people need to create a market if there is no market there. So the way you create a market, the way you start selling things is by buying them first, creating some sort of an excitement, and then eventually people will start buying. Now, looking here at the RSI of the New York Composite, it is quite overbought on the weekly side of things. If we look at the daily side of things, again, it is quite overbought here. This market, in my mind, is expensive. Let's see how expensive it is. Here, S&P 500 P ratio is at 2148, very high. It is said that it is 20 to 30% overvalued at this point, probably more on the 20% side of things. Personally, to reach a true bottom, a bottom that holds, if you look at this, the bottoms that created the long rallies, we're looking at a PE of 6 to 8. That would be a nice point at which we could actually create a sustainable rally. But then sustainable rallies are based on real economic activity, not stealing from the future and giving to the present. That's not the way that a true rally starts. Along the lines, what else do we have? Currencies, Canadian dollar, for example, it was at par a couple of days ago. The Australian dollar is very strong. These are commodity currencies. British pound here, which is also way too strong for really what it is. The Australian dollar is almost at par with the US dollar. Quite unheard of historically. And of course, going to the main counterpart of the US dollar is the euro. Once again, back up at 140, down from 120. This is starting to make European exports expensive again and makes American exports cheaper. But this is a race to the bottom. Everybody tries to devalue their currency and tries to stick somebody else with the bill. Now, this being 10 o'clock Mountain Time right now when I'm recording this, gold is dropping as we speak, oil is dropping as we speak, so that means the US dollar is going up a little bit from here. Other things I've come across, here's just one of those articles where I just shake my head. Options showing no black swan in emerging market stocks as growth quickens. Now, the point of a black swan is that nobody expects it. Nobody knows that it's there, not the option market, nothing else. If people are expecting it and the options are pricing it in, it is no longer a black swan. So, guys, just whatever. Obama, of course, is not doing very well due to joblessness, which is much higher than reported. The actual unemployment rate, once you look at the U6, is more along the lines of 17% rather than the 10% that is advertised. And currently, once you add in the underemployed people that are still being supported, it's estimated that 20% of the U.S. working population are currently getting their money from Uncle Sam. That cannot last. Love this. Investment bankers, of course, paid themselves once again a huge bonus for this year's performance. So certainly somebody is not starving here. JP Morgan has made good money this quarter by simply taking out some of the safeguards that they put in place after the mortgage market collapsed. We'll see where that goes. Now, of course, there's a big problem, and Malden has an excellent article this week talking about how many of these foreclosures are going bad because there's no documentation in place, and there's going to be a lot of banks that are going to sit on mortgages that they cannot foreclose upon, where people will simply be walking around. I suggest you should read this article. And even the Molden doesn't think highly of people who walk away from their obligations. Personally, I think go for it. Bank of America, of course, is once again up to their old tricks. They're once again repackaging things that really shouldn't be repackaged. And um, yeah, banks are basically doing exactly the same thing because Uncle Sam bailed them out. They learned nothing. The same people are still in charge. Nobody went bankrupt. Nobody gets charged. Everybody's happy. Huge bonus packages. Taxpayers, current and future, will be paying for it. But that doesn't really matter. These are the Wall Street lobbyists that continue to try to write the laws that are there to govern them. That's going to work out really well, I'm sure. Here's an article that talks about Walmart not seeing the sales bounce back. So at the bottom, and this is basically a big divide, is there are some people who are making really good money right now, mostly those who are in line for money from the government, um, and of course the people at the bottom are not, and they're the ones who are really hurting at this point, which is unfortunate. Trade gap, US is once again importing more, exporting less, and that of course doesn't do much for employment. And then here, every day the market goes up, the market goes down, and there's an explanation of some sort for it. None of the explanations make a lot of sense, but this is sort of what's out there. Confidence among US CEOs falls to the lowest level since May of 2009. CEOs being in the middle of everything see this thing just not taking off. And as I already said, if the only thing that's driving you is that things are so bad, are you going to get free money from somebody from the future? Well, that isn't much of an economic plan for all I am concerned. What else do I have? The Washington doesn't want to get involved in fixing the mortgage foreclosure problem. That might be a problem as well. We'll see where that goes. Of course, everything right now is election based. Midterm elections are coming up. A lot of things will happen here. Here's an interesting statistic I came across, and that is basically um, borrowing and where it comes from. This is household borrowing, which has basically dropped off. Since 2008, there is no more household borrowing. It's actually households are paying down their debts. Businesses are paying down their debts, and look who makes up for that borrowing is the government. The government is borrowing and spending like crazy. These guys down here, businesses and consumers, get it. They get that they have to get their house in order. These guys do not get it, and that is very unfortunate. And there will be hell to pay for a very long time in the future to work through this mess, but that seems to be somebody else's problem. Anyways, that's all I have for today. I continue being long the US dollar, short gold, short commodities, short the market, and I'm just taking things one day at a time. Certainly not very right now, but this is more of a, um, a bigger bet, and we'll see where that goes. Hope you make lots of money. Good luck trading, and all the best. Bye.